Hi there, and welcome to the week ahead. It's Friday again. Came around very, very quickly, and we will be looking ahead for the week starting the 20th of May. So just going to hold on a few more moments whilst a few more of you jump on. Excellent. So as I said, thank you for joining me. I'm Fiona Cincotta, Senior Market Analyst here at City Index. Just going to be taking a look through the key events for the markets next week and how they may impact particular markets, any trade setups that could be available. And just before we get started, I'm going to need to ask you to read the risk warning. So just take a moment. I'll pop myself on mute whilst you read through that. Excellent. So let's begin. So what we'll do, as always, we'll just go to the UK, the City Index calendar on the website. I've filtered this under week ahead and for the high impacting events so that we can see what's going on. Now, just to kick off, actually, what we were not seeing on here is that Federal Reserve Chair Jerome Powell is due to speak on Sunday evening. So that, or on Sunday, sorry. So that's actually going to kick things off earlier. We might see a little bit more volatility on Monday than we would do usually. Obviously, Federal Reserve Jerome Powell's comments will be really closely watched, given the data that we've seen this week, that we saw the cooling inflation. It's the first time this year that inflation's actually cooled to 3.4%. Still considerably above the 2% target that the Federal Reserve has, which several Federal Reserve officials have pointed out in their commentaries over the last few days, which has actually helped the US dollar pick up those lows that we saw. So I'm just going to go straight in there with this chart of the US dollar. See, this is the release there that we've got that bearish engulfing candle on Wednesday with the inflation release. And then here we go. It found support there on the 100 SMA at 104, which is also the low that we saw around here. So that's the 104 level. Now we've seen it rebound higher. It was a brief break below the 200 SMA, but again, it's up now. It's just trading at the moment caught between the 200 SMA and the 50 SMA. The 50 SMA is just trying to retake really now as we speak. I think what we'll be looking out for on Monday when things kick off, if we're going to hear those comments from Powell that, you know, rates could stay high for longer, reiterating what we already know, that could potentially help support the US dollar back up to that 105 level. That's going to be the line in the sand, really, for the US dollar, but we'll probably need to hear a little bit of a more hawkish tone coming from Powell in order to get there. If we do hear, on the other hand, a more dovish tone coming from Powell, then, you know, watch the 200 SMA there at 104.30. Below there, the 104. If we're going to break below the 104, then that's going to be not only below the 200 SMA, which potentially suggests a more negative outlook. We could see sellers gain momentum. We've also got the RSI at the moment below 50. So that again would be supportive of further downside. Now, I start off with the US dollar, but then we're just going to continue because there are more US events later in the week, but I'll come to those markets and look at the US stock markets shortly. But first, I just wanted to kick off with the dollar because obviously it's also useful to know what's going on with the dollar when we look at other currency pairs. So we've also got here the, what have we got? Inflation data from the Bank of Canada. We've got Canadian inflation figures coming through. Now, inflation in Canada has been cooling. We've also seen some weakening in the labour market. So there is sort of some hopes that the Bank of Canada could be looking towards cutting interest rates in the coming months. potentially in the September meeting, but they're going to need to see that sort of this idea that inflation is continuing to cool. But as we can see, you know, inflation was at 2% in the March reading, so you know there we're already getting, you know, pretty much at their target level. We'll just be watching now the core inflation, sorry, was down at 2%. We're just watching headline inflation now to see whether that can continue falling. Now it's quite an interesting chart, the US dollar CAD. So let's just jump straight onto there. So we've had this weakening. This is the weakening of the dollar that we can see, the weakening of the dollar that we saw in that initial chart of the DXY. We can see found this support here just below the 136 level, and it's pushing higher. It's fallen below this rising trend line support, which has actually been in place since the start of the year. So, you know, that's quite a key level that we would be looking if we break below there, but we'll be watching now to see whether we can get back above there. Now, obviously, if we get cooler than expected Canadian inflation, and we have sort of continued sort of comments from, as I said, Jerome Powell about, you know, rates staying high for longer, then that could see the pair retake that rising trend line. So that's what you're going to be watching out for. But if we do see hotter than expected inflation, then watch out 136. Below the 136 pretty soon after you've got that 200 SMA there at the 135.70. So, you know, as I said, if we get stronger than expected Canadian inflation, or we find that Powell is still very much set in his ways that we're going to start cutting interest rates soon in the US, and that could see a weakening of this pair. Test of that 200 SMA could see sellers then start to gain momentum. So what else have we got on? I'll come to, we've got Andrew Bailey. He's going to be speaking. We've also got inflation data coming from the UK, as well as retail sales and PMI data. So there's a lot going on as far as the UK is concerned. So Governor Bailey is going to be speaking. Obviously, we've got the inflation data. That's going to be the key data for the UK. Investors are going to want to see that inflation is continuing to cool. We had the inflation cool in March to 3.2%. That was just marginally hotter than expected, but it was still a cooling, and it's expected, I think, to cool back towards that 2% target level. So that's what the markets are going to be watching out for. And we've had this week, if we think about what we've seen this week, we've had data from the UK labour market, and that showed that that unemployment ticked higher. So we're seeing some sort of weakening in the labour market, but we're still seeing pretty sticky wage growth. Okay, so it did cool a little bit, but it's relatively sticky still. So what we're going to need to see is, you know, the market's going to be very focused now on whether that inflation figure is falling. If it is, then we could see some weakness in the pound. We've also got the Bank of England monetary policy report hearing that's in Parliament. And then we've also got the PMI data. Okay, so we're expecting here to be sort of looking at is the service sector still growing strongly? You know, it was up at 55. 50 separates expansion from contraction. We know that service sector inflation has been sticky, so that again is going to be something in this inflation report that we'll be watching. So let me just get on to see, and then obviously there's also retail sales as well. So there is a lot going on for the pound US dollar this week, and it's quite an interesting time for the pound as well. It's trading, you know, it rose up to the monthly high, recovering really well from the lows that we saw at the end of April. You know, if we think about where we were at the end of April, we're down at 123, and now we're just shy of 127. Again, this is we can see that's the weakening there of the US dollar on the CPI report. We've reached that high just below 127. We're falling lower. So if we're going to see cooler than expected inflation, weak labour, weak retail sales, sort of, you know, hawkish commentary from the Bank of England. And the first level to be watching here is around that 126.30 level. That's the high, the spike high that we saw last week's high. It's also the 100 SMA. Now, if we get a break below there, then I'd be looking out here. This is the 200 SMA around the 125.45 level. It's also a level that was important in April and around this time in February as well. But if we do get sort of stronger than expected, hotter than expected inflation and stronger retail sales, signs that service sector inflation is remaining sticky, then we could see a strengthening of the pound. And obviously at the same time, you also need to be taking into account what might be happening with the US dollar and what Federal Reserve Chair Jerome Powell's been saying. But on the upside, you know, we'll be looking at this 127 level. If we get a break above 127, then I'll be looking up here for 128. There isn't that much in the way between them. Maybe 127.60 could sort of cause a bit of a hurdle, but they're the levels that I'll be looking for there. And then the other one to be watching here is the FTSE. I mean, look at the FTSE. We've had this astonishing rally on the FTSE right up to that record high of 84.80, and it's just come off again now. You know, this is sort of optimism that the Bank of England is going to be cutting interest rates. That's obviously helped weaken the pound a little bit, which helped this rally up. But also just the fact that, you know, we're going to potentially be heading for lower interest rates is upbeat news for sort of the UK consumer, retailers. And then you've also got some signs of recovery in parts of China as well, which has added to that optimism. So, you know what, I'm going to be watching here 8400 on the downside. If we did sort of see, because we've got this overbought territory here, the FTSE is very much an overbought territory. If you're going to look for a pullback, watch out for below 8400, and then you've got 8300. You know, there isn't really too much in the way as far as support is concerned, and even that's minor. It's just the psychological level. I'd say real support, it comes in around the 8200 level. A move below here would negate that near-term uptrend. So let's just keep moving on with what we'll be watching. We've just got here, we do have the RBNZ monetary policy announcement. They are not expected to move on interest rates, so they're expected to hold interest rates at 5.5%. Now, let me just pull up the, bear with me. So the meeting comes, basically inflation in New Zealand is still relatively high. It's around 4% in the first quarter. So it's still above that target of the 1 to 3% target that the RBNZ has. So, you know, there's no motive for the central bank to start cutting interest rates just yet at all. There had been concerns, I think, that, you know, the next move, or there had been expectations that maybe the next move from the RBNZ would actually be a rate hike, but for the time being that doesn't appear to be the case. I think, you know, it's just going to be a hold steady with at 5.5%. They probably have a slightly hawkish tilt to or bias to the commentary, whilst inflation still remains elevated. Now, as we can see here, we've got this chart, we've got this really strong rally up from the lows around the 58.50 level. That was at the end of or mid-April. Recovery above the 200 SMA. Again, this is to do with the US dollar weakness as well. I've taken out the 60 level. Now we hit a high here of 61.40. That's the level that buyers are going to be looking to take out. Okay, so I mean, if we get a hawkish tone from the RBNZ, but Federal Reserve Chair Powell is a little bit less hawkish and more dovish sounding, then that could help boost this pair over the level. Once we get over 61.50, then I'll be watching up here to 62.20. This was the level that was important back in March and February, so February and the March highs. to be watching out for. If for whatever reason we start to hear that the New Zealand central bank is adopting a more dovish tone, which I think is probably a little bit premature, but then, you know, or if we get some US dollar weakness, watch out for this level here, 60.40. You've got the 200 SMA, as well as the low from February. So just a key level to be watching out for. As we continue through Wednesday, right, so we've also got the FOMC minutes. So I think these are going to be really closely watched. They might feel a little bit out of date given the recent inflation data, but I think it's going to be really interesting to hear what the Federal Reserve minutes show, or to scrutinize those minutes, because basically if we think about, you know, what happened across the first quarter of the year, we know that inflation in the US was sticky. We also know that the US economy was resilient. And what we've seen, okay, we've just started to see that inflation starting to cool slightly again now. But when this meeting took place, the Fed left interest rates on hold. Inflation had proved to be sticky. And the tone was very much that, you know, the Fed was not going to hike. The next move by the Fed was not going to be a hike, but they still needed to keep rates high for longer in order to tone inflation, to gather more evidence that inflation is cooling in line with forecasts. And to be fair, I don't think that much has changed since that meeting, apart from the fact that we've had the inflation data cool. We've also had the jobs data, which came in and showed that perhaps there is some weakening in the jobs market. Now, let's not forget that the Fed has a dual mandate, you know, with jobs and with money stability. But I think right now, you know, the focus is on inflation. I think that's where they're going to keep their focus on for the time being. This is the gold chart that we're looking at here. If we get a slightly more hawkish sounding Federal Reserve, then that may boost the US dollar, which could hold back gold prices. If we get concerns over that the Fed is going to keep rates high for longer, that may also lift Treasury yields and also prove to be an obstacle for gold. But we're seeing actually this pattern here. It's broken out of its symmetrical triangle. It's trying, this is the level, it needs to get over the 2400. If it can get over that 2400, then it brings the all-time high 2430 back into focus and potentially fresh all-time high. So that's going to be, I think, 2400. If we can get a close over there, that would be a really encouraging sign that we are making our way towards fresh all-time highs. On the downside, immediate support, well, you know, let's have a look. There's not too much down to 2280, but I mean, you've got the round number, I guess 2300 is around here. And even, let's have a look, you've got the falling trend line support there around 2340. So that would be on the downside. My first sort of point of support would be at that 2340 level. And if we get a breakdown there, then watch out for 2280. Whilst we're on Wednesday, actually, let's talk about Wednesday, because we also have NVIDIA earnings on Wednesday. So this is NVIDIA's Q1 earnings. They are going to report after the close on Wednesday. Now, expectations are for revenue to triple what it was this time in the first quarter of last year to 24.65 billion. Earnings per share is expected to be $5.17, and that's basically up from 82 cents in the same period last year. So, I mean, these figures just give us some idea of the huge advancements that we've seen in NVIDIA. Obviously, NVIDIA, just to remind you, is the chip maker which has been at the sort of center of the AI boom, whose chips are used for AI. And basically what we're going to be looking for is sustained growth, particularly within the data center segment, and also as well any updates on the Blackwell platform. So basically, these are the figures that we're expecting from NVIDIA. The data center segment, and that's what's going to be very much in focus, I think, has basically it's grown rapidly because of this, huge demand for the chips capable of running AI workload. Now, data center revenue reached a record high of 18.4 billion in the fourth quarter. That was well ahead of the record that it set in the previous quarter and 5 times bigger than what it was the year earlier. So, really big figure for the data center. That's going to be a massive focus as well for sort of what we'll be expecting. I think it's expecting that it could reach 21.17 billion in revenue in the fiscal first quarter. So that's the figure we'll be watching out for the data center. And then also we've got this focus that's going to be on the Blackwell ramp, and that's this, the Blackwell platform was basically it's the latest AI powering technology that was unveiled at its annual GPU technology conference, which was in March. And basically this platform included a Blackwell GPU, which is the company is saying is going to be the world's most powerful chip. So basically we're going to be looking for any updates about this, because there hasn't been any specifics about pricing or availability. Although we do know that it will be available through its partners, which are Amazon, Microsoft, and Alphabet and Google later this year. We also know that the chip maker has been struggling to meet demand for its AI capabilities, so we'll be just looking for any updates as far as that is concerned. Now, let's just have a quick look at the chart for NVIDIA. Here we go. So here we are, trading just below record highs. We fell down here, there was that sell-off in chips down to around the 750 level, but we've seen, a really strong, steady recovery. Since that, there have been, signs of dip buying every time. Buy the dip has also been very much a key theme, so that's been providing more uptrend. RSI is still not in overbought territory, so it's supporting further upside. The level to watch here is clearly going to be the all-time high. Some encouraging numbers, and I think more importantly, upbeat guidance could see that share price rise to the $1,000 the share without too many problems. Obviously, any levels of disappointment, be watching out for the trend line support to come into play just around that 900 level. Below there, maybe around the 835 level, we've got a couple of that's sort of limited losses on a couple of occasions as well. So they're the levels to look there. Let's just have a look at what all this means for the US NASDAQ. Now, obviously, we've had all-time highs in the US stocks this year. This week, this year. So we had the NASDAQ on Wednesday and the S&P both rise to fresh record highs. We've also had the Dow Jones yesterday reach 40,000. So again, looking at this chart, I mean, we've taken out that level here at the 18,466. That was the previous all-time high, pushed higher to the record high of 18,760. Do you know what, buyers, if we get some upbeat numbers from NVIDIA, if we get a slightly dovish sounding central bank, then I think, potential to continue to grind higher towards that 19,000 level is very much a possibility. However, if we get any sense of disappointment, and let's not forget that things could be a little bit difficult with NVIDIA in the sense that so much optimism has been priced in. You know, it's just difficult to know at what level will that have already all been priced in. So, you know, the bar is definitely high, which does mean that it's potentially open to disappointment. So just as far as support is concerned, the other one to watch here is the 50 SMA around the 18,000 level. I think, you know, if we get a move below there in the 17,800, then that's going to see the near-term uptrend negated. And then we haven't even talked about Europe. I mean, there's so much going on next week. So here we go. We've got PMIs coming out of Europe. We're going to be very much looking for this idea that the services are continuing to drive the recovery. So we're expecting to see growth in the services PMI. What about Germany? Germany as well, you know, seeing growth there, but manufacturing still pretty depressed. Really, in Germany, down at 43.5. Manufacturing here 46.6, still really quite depressed. So let's just have a look at what's going on. We had Eurozone inflation data today. We've seen that strengthening of the US dollar, and that's just sort of bringing the pair lower. But look, you know, if we have a think about what's happening on the bigger picture here, it was trading within a falling channel. We've had a really impressive grind higher across the past 2 months almost, rising above the 200 SMA, broken out of that channel. But what we're going to see happen here, we've got to try and get above that 10, I mean, it's 109 basically. So if we get some strong, encouraging data from the Eurozone about the growth outlook, about the PMIs, then I think then we could take out that 109 level. Because what we've seen is, although the ECB are on track to cut interest rates in June, the euro has actually managed to recover, and that again is to do with that US dollar weakness that we've seen, but also because of this idea that the Eurozone is actually recovering from its stagnation. You know, we've seen GDP data for the first quarter as strong as it came in at 0.3%. So we saw strong growth compared to the 0.1% contraction at the end of last year. So that's what's been helping the euro US dollar higher, as we've seen sort of, you know, the Eurozone economy is starting to recover. We're also just starting to see signs of a potential slowdown in the US economy, be it minor, but at least it's meaning that the divergence between the strength of the two economies is less, which is offering some support to the euro. Now, obviously, if we get the strong data from the Eurozone and we're sort of hearing more dovish sounding Federal Reserve speakers, then that would mean 109 could get taken out. We'd be looking up here to the 109.80, which was the March high. There is obviously that sense that maybe we won't hear the Fed sound quite so dovish because of what we've been hearing from Fed speakers so far at the end of this week, in which case we do see US dollar strength and, you know, any signs of weakness in that PMI data, then be watching out here. These are the levels that I'll be watching out for. First of all, you've got this level here around the 108.25, that's the 100 SMA. It's also just around the falling trend line resist support. Then you've also got 107.80, which is the 200 SMA to watch on the downside before you get towards the 107 level. And just finally, I'm just going to squeeze in a quick DAX chart before we go. Sorry, bear with me because I know time's ticking. Where is it? Bear with me. Sorry, there it is. Okay, so again, looking here, we've seen the DAX actually fallen away from the all-time high that was reached earlier this week. But you know, if we get some strong data from encouraging data from the Eurozone, encouraging data from Germany, then we could find that this level does hold. We'll have to see. This is the 18,650. This was the previous high. The all-time high reached at the beginning of April, now proving to be a support. Will the market be able to hold that support? It's questionable, because I mean, if we just have a look at that bearish engulfing candle, it's quite aggressively, it breaks through the rising trend line support. So, you know, we'll need to see what happens here at about the 18,650 level. If we get a breakthrough there, then watch out for a fall down to the 18,276, which is the late April high. On the upside, if we're finding this level holds, then 19,000, that could be what we'll be looking for fresh all-time highs. So thank you very much for joining me. I hope you've enjoyed what you've seen. And oh, sorry, I've just thought we didn't do Friday, but there was the retail sales. No, it's fine, that's fine. So yeah, if you like what you've seen, then please do give the video a like, and I look forward to seeing you next week.